firm of Cassels, and Blackwell. And with me today I have two of my other partners who I'll ask to introduce themselves in a moment. What we're going to talk about this afternoon from this session is Sukuk structuring considerations under Canadian law. And we're also joined today by John Ruffalo from Deloitte. And we have the pleasure of also including some taxation issues or questions because those are obviously always on the forefront of an issuer's mind, whether it's a sovereign issuer or a corporate issuer. How we're going to proceed is my focus is in corporate securities law, and I'm going to talk about a few of the securities law considerations. And then Jonathan Fleischer is from our financial services group. He'll talk about some of the property interest and leasing issues. And John Birch is my partner from insolvency and restructuring, and he'll be talking about what happens when you need to unwind these structures. And we're looking at this all from a Canadian perspective. And then finally, probably most importantly, is John's going to talk about how do you deal with these tax issues, because as we've learned in looking at Sukuk, there's a transfer of property, and obviously, and among other things, it's going to trigger tax. So there has to be tax considerations, whether it's from the sovereign level or the corporate level, and how to move forward. So with that in mind, let me just quickly hand it over to Jonathan to say a little bit about himself, and then John and John. So we have three Johns, so you have to be careful on how you ask your questions, and one Brian.
I'll be the first John. My practice is focused in the financial services world, mostly on the origination side, and with a particular emphasis on lease financing and equipment financing. The reason I've been so fascinated about this area is it ties totally into what is traditional in Canadian leasing practice and law, and it's a method of being able to take that practice into a new arena, and we'll talk about that more as we go forward.
Good afternoon. I'm John Birch, and I'm a partner at Cassels. I practice primarily in the insolvency area, and my background is as a litigator, so I'm the guy who has to go to court when the CCAAs hit or when there's some kind of an insolvency issue. So I think very much about these structures as to how a court would approach them, and I've particularly enjoyed assessing how other courts in other jurisdictions have dealt with compliant products. So I'll give you a little bit about that when my time comes.
And I'm John Ruffalo. I'm a partner at Deloitte. The focus of my practice is best summarized as helping Canadians source capital from outside of Canada, whether it's U.S., Europe, or elsewhere. And over the last number of years, a big focus of the practice has been sourcing capital from the Middle East and developing appropriate tax structures to deal with some of the tax issues, both from a structuring perspective and, frankly, from dealing with the federal government to deal with some of these issues as well.
Great, thank you, John. So we'll now start off with securities law considerations, private placements of Sukuk in Canada, and listing Sukuk in Canada on the Canadian National Stock Exchange. And to start off, I don't want anyone to think that there's a link between doing a private placement and listing a private placement security on a stock exchange, which I'll get into. The reason I've focused on the CNSX as opposed to the TSX, the Toronto Stock Exchange, the much larger of the two stock exchanges, is that the CNSX actually has proposed policies that deal with Sukuk. So I thought it was appropriate and relevant to let others in the community here know, and globally who are here from other countries, that they're definitely Islamic friendly on the CNSX. The reason I've chosen to discuss private placements, the GE Sukuk was more of a prospectus, and that requires a whole further consideration of the application of the prospectus requirements in Canada and apply that to an offering by an issuer who would look to be doing a prospectus offering in Canada. I think what is more common right now is you're seeing mostly private placements, international private placements of Sukuk, whether they're Malaysia, and GCC or MENA region, or just in one region or the other. Many of them are done with what are called offering circulars, offering memorandum. They go by different names, offering documents, etc. So to start off with, what we're looking at is how would these things work in Canada? And to the extent that we can, we're going to probably just provide a higher level overview to allow people to understand how it would work. So if I would start off with, I'd probably get a call from a lawyer like Human and say, we're trying to do a sukuk offering in Canada. What do I need to know about the legal requirement, like the security law requirements? So frankly, the response is that Ontario and other Canadian jurisdictions, we have a closed system, which means, in terms of securities laws, which means that you can only issue securities if it's pursuant to a prospectus or a prospectus exemption. And as many of you know, or have been part of, a common prospectus exemption is an accredited investor exemption. So we would let them know that they can only sell those securities to those if they want to qualify under a certain exemption in Canada. One common one is a $150,000 minimum amount investment or an accredited investor. And often these products are sold to institutions, so it's not going to be a problem for these institutions to take down these types of financial instruments. If they're trying to focus on the retail side of it, an accredited investor in terms of a person or like an individual would be someone whose net income was over $200,000 in each of the most two recent calendar years, or with that of the person's spouse exceeded $300,000 in each of the two most calendar years. So there's nothing new. These are, accredited investor is also a term used in the U.S. And to the extent that a lot of these documents are under U.S. law and they're familiar with U.S. jurisdiction, we're very friendly. We're no different than that. If one does, for example, use an accredited investor exemption, like all things that would be required, the issuer would have to file a form with the Ontario Securities Commission indicating who the people who purchased the security and pay whatever requisite fee was required. Now, in terms of what is an offering memorandum, I think you've seen these big documents, whether it's the Germany one or the GE one, etc. What is this thing that we're looking at if it's not a prospectus? And you look at it and you say, boy, I looked at the GE one and I looked at the Indonesia one and they both look the same to me. There is a difference. One obviously is a prospectus and one is not. One is an offering memorandum. So I have a definition of what an offering memorandum is, and simply put, anything that's being used to sell securities, more or less, rule of thumb, other than a term sheet, could be broadly construed as an offering memorandum. So, I think I heard earlier this morning, you read these voluminous circulars with all this information that's very confusing, and people would want like a 2 or 3 pager summarizing it. Unfortunately, those can't be distributed because those in itself would be an offering memorandum unless it complied with certain basic requirements. So typically what you'll see is the only thing that will be circulated is that big, bulky document called an offering memorandum. In a prospectus offering, the dealers use what's called a green sheet, which is a summary, but because it's not going to the public, it's only for the registrants, the dealers. They're comfortable, the regime allows that. So now that we know what an offering memorandum is, what has to be in it? Looks pretty detailed to me if you see all these headings, etc. And the simple answer here in Canada is that there's no prescribed form of offering memorandum. In a prospectus, there's what are called long-form prospectus requirements that lay out all the headings you have to include about your board of directors, but the business of the company and all these other things. So what are we left with if we don't have a form that has all these rules and headings of what we have to include? We're basically left with the rule of thumb is that these documents are generally prospectus-like. So you'll find many of them actually follow a prospectus document, and what they're trying to include is to have, to use a prospectus standard, full, true, plain disclosure, which is the Canadian language that's used in prospectuses. But from an offering memorandum, it's simply, it cannot include a misrepresentation. If there is a misrepresentation, then it could be actionable. The investor could sue the issuer. to try to get their money back. So that's why you have your lawyers and other professionals to try to ensure that that offering document, that offering memorandum, doesn't contain a misrepresentation, and it's stress tested, due diligence, etc., to ensure that when it goes out, it's pretty clear.